Anyway, so happy to have you here. Let's see, it's almost the end of June. We always are as to when to have this seminar. In the old days, when we used to get the information on a timely basis, we would do it so that you would have time to look at things and do them before you close your books on June 30th. And so we were talking about it, and as Heidi will tell you, that the DOE audit program changes are now. We don't have finality to how we're going to handle everything with GASB 87. We have more information, so as we go, we get a little bit more, and Heidi and Mon and Val will be sharing all of that with you. So the decision to hold the session, last year we did it in July, and we were talking, and my team of experts here said, oh, we said do it in July, and I said the purpose of this whole thing was to alert us that they could do before they close the books on June 30th. But of course, you know, there are things you can do after June 30th, but if you need to make a cash payment or something, you really want to get that in by June. So we do the best we can with the information that we have, and you all do that too, so I'm sure you understand that. So I think we're going to begin with Valerie. She's going to talk about how we get started with the audit and what things we're going to need. Valerie.
Good morning, everybody. Thank you so much for coming. I know to see a lot of faces. Hello to everybody who's virtual. Hopefully, Laura, we're good over there. They can hear virtually. Perfect. Thank you, guys. All right. I'm going to cover the usual, as everyone always needs, the most important things that we need to get the key documents for your audit. Obviously, we need a lot of things to get our audit going. The more that we have ready, as we've always said, the more that's ready for us, the less of an intrusion we are in your lives during the audit. You know, we are out starting usually in the field, starting late July, early August, all the way through Thanksgiving. So if you think of everything that goes on in a board office in that 6-month period, if you have us in your faces, it can be very difficult. We go through everything. So all of you have each received a packet. There's one packet per district, and in your packet is updated. It will include all of the records. It has a printed list of a client prepared list that includes all of the things. That's the stuff that we'll always need. Additionally, all the reports that can be generated. Now, as we've always said in the past, we do not need that information in paper. Electronic is best for us. So the more that you can generate electronically, don't kill trees, just to write your detailed general ledger. A PDF is just fine. We also have the 2 ways that you can send us those documents. You can either obviously send them to us, but we also have a secure server where you can upload all of those and all those reports. So the best advice we always say is to take those records, make them into one folder, and then you can upload all of the folder all at once. Additionally, there's all the statistical section. This is always one that we're chasing at the end. But it is actually one that you can do right now. It doesn't even have to wait for June 30th. The best thing for you to do is go in there and do most of those schedules, insurance information, enrollment information, full-time equivalents. All of that information can be done now. It doesn't have to wait. There's a transmittal letter, which just has a small section that needs to be updated for any major initiatives. Another area that you don't have to wait for your audit to do. You know what your initiatives are and you know what's coming. Update those. And then the MD&A is the one that obviously we need information and input on some of those areas that do relate to financial, but there are other sections in that MD&A that can be done in advance. As we always say, there are the wonderful things that hold us up. One of the common delays is fixed assets. You'd be surprised how much a simple report generated from an outside appraiser or internal can hold up all of the works for us. We can't finish your audit and we can't write it without the information. So it's not a last minute information that we can add. What we always say is ensure that you get your update done timely. If you're using an appraisal company, our recommendation is you should be putting it in now if you haven't already. You do not have to wait till June 30th. Just let us know what date you cut it off at. So even if you got closed at this point through May, contact your appraisal company, send them the updates now so that you'll have a report back in time. Obviously, they're trying to process how many school districts all in that same window. You don't want to have your whole audit done and not have the appraisal report. Make sure that when you're tracking the thresholds, what we're looking for is 2,000 and above. Your fixed assets additions should really, any additions that you're giving us should be what's in your Fund 12, your Fund 30, Fund 20, if you had any expenses with funds. If you do have, what we always ask is if you do have expenses that are in any of those accounts that are not being capitalized, just let us know. There's a lot of areas such as architectural costs and things that do hit. And if you're not choosing to capitalize them, you just have to let us know. So when we go to do our reconciliation, Fund 30 expenditures are recorded as construction in progress. And then we record those as a fixed asset when the project is complete. So as you're incurring expenses, there's no need to track those as an asset. They go in as a one number in the report as construction. And then when the project's complete and we close out that project, it'll get transferred to fixed assets. And then last, any deletion that you're pulling from your report, make sure that it is required to be supported by a board resolution. That one is a hard one. A lot of people miss this piece of it, especially if you have stuff that's damaged. A lot of times things that are damaged just get thrown away. I know I had a district this year that had a lot of flooding, and things just got thrown out in the floods, and not a lot of stuff was ever documented by resolution. So we actually told them to go in and do a resolution disposing of all things destroyed during the flood. So at least something is documented for them. Another delay is compensated absences. This one's been a little bit less of a delay over the last couple of years, but please make sure you have a compensated absence listing done. Obviously, June 30th is here. Most of your teachers have already done for your year. Make sure you update that. And we're also required to report that by function. Also, the one thing that we always tell everybody is once you run that report, give it a quick look. You'd be surprised how many times a decimal point throws that whole thing off, and we'll be looking at that report and it'll be millions of dollars different purely because a percentage or a formula was wrong in that report. So just look at it between beginning and ending balances and make sure that that change seems reasonable. And anybody that you've paid out, we do need a list of all those retirees and who they are so we can ensure that A, they're off the reports and that we know where they are when we're testing them in our system. We also gave you information about the J schedules. There are like J15 through J20. Usually we're looking for, J15 is in your packets, but we can sometimes track it by county. So we can either track it by county or by your municipality. If you have a regional, sometimes the county is a better answer because it's one lump number. The other pieces, like I said, are ones you can do now. Most of those schedules can be updated as you speak, as you're doing them audit now. Especially the ones that we struggle the most with is J16. You'd be surprised. Your full-time equivalence is one that we can never seem to get. We're always chasing it down. So we do have most of those schedules in the J's. They are technically unaudited. If you don't give us the information, we just put not available, and we document it as such. But especially when you get into the J16 and 17, some of those numbers factor into the formulas, and you'll have calculation errors. So really the 16 and 17 are really critical for us. Now, these delays are the delays of the state. These are ones that have been holding us up consistently. On behalf TPAF pension, that number, sometimes we used to get that number as early as mid-August. It's coming out later and later. Heidi, I want to say September? It was September this year. We used to get it a little bit earlier. GASB 75 is a huge problem. And actually, GASB 68 is also a problem. We're losing our microphone. So these two come from the state. They have been so far behind and so far delayed that we're actually still waiting for GASB 68 this year. Double checking my numbers to make sure. We haven't even received those 68 numbers for pension for the municipals whose December 31st year ends. So that's how far behind the state is. These numbers cause a lot of problems. However, and the other one is Essex County. If you are a district in Essex County, there's a separate pension system that was in existence for Essex County, and that one is another one that holds us up. Fortunately for us, we did got all of the information for our audits last year, with the exception of GASB 75. GASB 75, we chose to roll forward the data and issued all of your audits on more so on time than anyone else. Any other auditing firms, your audits were long since done and in the repository because we took the appropriate stance to say GASB 75 is never going to come out anytime soon. And it was finally released February? January 28th. Yes, so it was almost February. And most of you had your audits done, completed, which helped us a lot.
Yeah, I'm creeping up. Come on up. I know Val's ready to go into the next mode, and I just wanted to interrupt. We love what we do. We absolutely love what we do. And we love taking on clients, and we love helping clients. And, you know, last year with the whole stance that we were going to issue without GASB 75 new numbers, we rolled forward the old numbers. We still hit some roadblocks. And so when Val's saying these are the list of things that we need, when the staff is out there, they prioritize them for you because we know your hands are full. You got a million things going on too. There are certain things that we need that affect the numbers that roll through the report. So if we're waiting for something like those on behalf numbers run through revenue and expense, bottom line is a change of zero. Bottom line is a change of zero, but it affects the revenues and expenses and it goes into the MD&A. So it really does wreak a lot of havoc. So we try our best to get as much of the financial information so that we can write a report and issue a draft to you as soon as we can when we get out of the field. We're at the point where all our in charges schedule their audits and they schedule them from like mid-July until December 5th. And they don't, you know, wiggle room creates itself, you know, things change, whatever, but they really have themselves booked back to back to back. So if they don't get the information for the first client that they go to, that audit is sitting and waiting, but everything's going to be sitting and waiting until this stuff comes out. And then they're always trying to catch up. So we try to help them as much as we can to keep things moving along. And then once this information comes out from the state and we know we're a go, I just like to explain to you what happens behind the scenes, and it drives me crazy. Like when the staff leaves, I would love to be able to issue a draft within 2 weeks. Sometimes it can't happen. Number one, it can't happen because of this, but then when we get this, we really try to ramp it up and get drafts out to you. So if you can work with the in-charges in terms of the things that are going to affect the numbers, you know, as much as we get to issuing a report and those J statistical information isn't there, you're like, it's another thing for you. It's another thing for us. But that's not impeding us from issuing a draft. If we have 5 schedules in the J's that aren't complete, we just highlight them. But, you know, as much as we can to work together to get all the information. I think there was one other comment I wanted to make. Oh, Valerie said print things to PDF for us. It's really better because once we have a PDF, we can search it for things that we're looking for. It's a lot easier than flipping through any kind of paper. And I think that's all I have.
And on another note for PDF, also a lot of softwares do have the ability to print them to either Excel. That's fine too. We actually, you might see, there might be some staff asking for some reports in Excel so that we have some data analytics software that can help us select samples and things, and they do want them sometimes in Excel. So if your system offers it in both, double check with your in-charge, which would they prefer, whether it's in Excel or in PDF. Some key dates. I just wanted you to have the slide. You know, dates are always targets and moving, but these are some key dates that float around just to remind everybody of. The 2 that we usually really do look for is obviously doing your e-cert is an audit procedure. We look for those. We do look for your board secretary's reports being filed with the county. Just a reminder, even though those dates, they're unaudited numbers that go to the county. So even if it's not perfect, the county, all the requirement at the county level is to check off a box that you sent it. You can always send them a revised, you can always send them, but if you send it and it doesn't even they check off a box, received. That's the extent of the test of that involvement. So if it's not perfect, it does not have to be perfect when it goes to the county. You can always correct it, so don't hold. Just because you'll end up getting cited in the report for just holding it to make sure everything's buttoned up correctly. These were the original reports on some of those the application dates. We just have that in there as a slide for you. Odd sum. This is another area that, you know, as right now I have it listed as a due date of December 5th, because as of right now, it has not been extended. Last year, it went to January 4th. It is really critical, as you all know, when you're taking, we enter that information on the screen from your software. We enter it in from our audit schedules. But that number, if we select the wrong account line or we put it in other purchase services and it's educational services, we do skip lines and we miss things sometimes. So it is really critical for you to, when we send you a draft of that, to check those lines, check those areas, because you won't know there's a mistake until you get your budget software download. And then all of a sudden something's in the wrong line. Fortunately, it has gotten much better. It used to be, we used to have to contact Heather Leary to open the file. We'd upload it. You'd have to wait 24 hours for the correction. Now the correction is much more it's much faster. But if we don't have to do those corrections, it's much better for you. You're in the middle of working on your budget and you suddenly realize, oh my, this is on the wrong line. Call could be avoided by reviewing. Then once we finish our side of the odd sum, you all have to go in and do your school level reporting. Some districts, it's not a big deal. You have 1 or 2 buildings. Some districts have 13, 14 schools, 15 schools. It's an undertaking. So we don't want to back you into a corner and get you right to January or December 4th and hand you a draft. We can get you something to start looking at so that you can complete that information for reporting. As we know, you have to upload your documents to the repository. This year, obviously, we know we had a change in our name. So now it is the ACFR. It is no longer the CAFR. It is the ACFR. So we do provide you with an upload. We have been sending them electronically to you at the end of our completion of our audit, labeled as those names are, along with an upload checklist for you, so that you know those things have to get uploaded. And they go right into homeroom. Once you get those reports, the district is required to generate some additional items and upload to the repository in addition to our documents. One of them is obviously your board resolution accepting your audit, and then a corrective action plan if there were any findings, and then your certification of implementation of your corrective action plan. One of the things we actually got this year is a request from the DOE. The corrective action plan is not, a lot of people got their corrective action plans sent back to them for edits this year, and because they're saying they're not including the proper information. So this year we went one step and told you, when you're doing your corrective action plan, please make sure you identify the specific steps and the procedure of the implementation. In addition, identify the person or position responsible for its implementation. I know a lot of people are hesitant to put a person or a name down on those corrective action plan. The corrective action plan doesn't point that that was the person who made the mistake. It is the person who's going to ensure that it doesn't happen again. They are looking for a name of a business administrator, a secretary to the superintendent. They are not looking for terms of administration. If you use the word administration, they're going to send it back to you and say who in administration. And then lastly, identify the time frame. They want a real date when it's going to happen. They don't want to say in the next couple of months. They want a date. They're looking for a hard date or a hard period. And I don't want anyone to have to go back. Nobody wants to redo anything. So if we can do it right from the start, let's go forward. Now, are you prepared for your audit? Everybody's favorite question. Obviously, we're going to prepare for our upcoming audit. We're getting there. We're ready. Okay, make sure you review all of your year-end transfers and obtain county approval if there was necessary. We're going to look at classifying your accounts payables and your encumbrances. I'm going to cover some closing. We're going to cover some treasurer's reports, some fund balance, surplus, and some various reserves. We're going to split off. A couple of us are going to cover each of these. So budget transfers. New for this year, they changed a little bit of the requirements. You only are required to have county approval for anything transferred to an administration line that was over 10%, and any transfers to capital outlay other than equipment. In the past, there were some additional transfers that were required. They changed that. These are the only ones that are required at the county level. We will be looking for those transfers and those approvals. accounts payables versus encumbrances. This one's a good one that we always try to remind everybody. Encumbrance is a purchase order placed prior to June 30th for which the goods and services have not been received, versus an accounts payable, which is when a purchase has been received, payment just hasn't been made. There is a distinction between the two because they're two different account numbers. Accounts payables are paid off of your balance sheet and are recorded in your 10-421. However, your encumbrances are reported in your 753, which roll forward into your subsequent year's budget. So we don't like to make that a reclassification because we'll mess you up next year for your budget. This is one for you to make sure that you handle and make sure that they're in the right categories. Salary, because salary and wages cannot be encumbered as of June 30th. If you have encumbrances that are, if you have reporting district for any type of salary and wages and accruals, make sure that they are recorded and are as accounts payables, not salaries. There is no service that hasn't been performed by June 30th for which it's just not paid. It meets the criteria of an accounts payable. TPAF FICA reimbursement, this is another one. This must be recorded as an accounts payable. It should be shown as an expense of Fund 20 and then recorded as an accounts payable. It is not an encumbrance to the state of New Jersey. It's a payable to the state of New Jersey. To close or not close? I think everyone's heard me say this one before. Should we close before your audit or wait until your audit journal entries? As we've said numerous times, you might not have your audit started till December. You have a county board secretary's report that's due in December. You want to close. There is no system that we know of. We've spoken to every one of your software vendors that A, we can do journal entries to correct anything after the fact, or B, if there's really a problem, every software can be unclosed and corrected if a real problem comes up. In all of my years of doing it, we've never had that issue come up where we had to unclose. Everything can be adjusted through an adjusting journal entry. So we always say, close those books, because if you close them, you've moved on. You know, you don't want to sit around waiting for us. So how do you post your audit adjustments? Audit adjustments can be posted when we get them to you. You do not have to even go back and start posting them as of July 1. If we finish your audit in December, we issue your audit and you receive your journal entries in December. If you want to, you can post them in December. The one thing we do suggest is if you're posting entries that have any relation to cash and you're making a cash entry, share that with your treasurer of school monies, and they can adjust their same corresponding report. There's no reason to go backwards in time. And if you have any questions, there is obviously in the audit program, when it comes out, we're thinking July, late July, early August is when they're giving us an estimate on the audit program. There is a section in there for closing, and there are steps in that audit program that you can follow on the close. Work with your software vendor and work with your audit team. As you're closing, if you have a question, pick up the phone, give us a call. You can call any of the partners. We'll answer or you're in charge directly. They'll walk you through if you have a question or you're uncertain in whether something should be classified. Feel free. You can ask us the questions anytime you need to. And make sure, like I said, walk through your accounting software vendor, because everybody, when you get through it and you go to close, inevitably there are edits. And some edits relate to entries. Sometimes they edits relate to something else. And sometimes you might call us and we'll be like, this one's a question for the software vendor, because I can give you a balance sheet journal entry, but it isn't going to fix your problem. So always consult your accounting software vendor. And Kathy's going to take over for me. Give me a little break.
Okay, so Val, great job. I don't do anything, right? I just talk. So I will just, okay, I got to talk into the microphone. I'm going to say that again. I just keep being Valerie's repeat button. And so we're talking about closing out the general ledger, but don't do that until you have reviewed those payables and encumbrances, because like Valerie said, the encumbrances roll forward, they get uploaded into the budget software, it wreaks havoc if you go ahead and do that and you didn't make that determination. So if there are people who, you know, are newer and need that guidance and assistance, please pick up the phone and call us, and we will walk you through all of those to make sure that you have them the way they should be before you press the button to roll forward. Okay? And then again, every year we have changes in the environment, right? We have new BAs, we have new staff. So we don't want to dismiss anybody's staffing situation or experience level. So we talk about the board secretary's report, and to most of you, it's probably just not very useful information, but we believe that it is, because when someone calls me and says, I have an issue, I always say, send over the board secretary's report. And I've been saying this for years, that you know, I can look at that board secretary's report, and in 5 minutes, I know 10 different things I need to look at to make sure that they prove. We talk about this, and it seems very simple, that cash has to agree to the treasurer's report. We said, in addition to that, you don't just want to make sure that cash agrees, you want to look at the treasurer's report and look at those reconciling items and make sure that they're clearing. I know that a lot of the treasurers, a lot of you are treasurers, and I know that you communicate with BAs and you say, okay, we have a problem with this, and you resolve them, but there are some that don't get resolved. So that's very important. When you're looking at capital reserve account, again, it's the cash in the capital reserve account. If you had a withdrawal during the year, you need to make sure that that's posted through the system. If it's not showing up, we always tell all of you, just send your report out to us and we'll walk you through it step by step. A lot of times the interest isn't allocated, it's not a big deal, but if you had a $250,000 withdrawal or a deposit, we would like to see those big numbers make it into the general ledger before you close. Allocating interest is not a big deal. Again, tax levy receivable seems very straightforward. You have the tax levy, you have the tax request that you sent to the town. I've encountered a lot of issues with the A4F where we'll do an audit for a town and there's a balance at December 31st, which is fine. We get to the school in June, and you just want to make sure that, you know, the tax levy is recorded properly and that you're going to collect that. So if you choose to set it up as a receivable at the beginning of the year, you look at this on a monthly basis and make sure that whatever the receivable is showing is the next, you know, you should have 1 month receivable as of now. Or maybe you got your June payment letter. Okay. So then with accounts receivable, anything that's sitting in accounts receivable, you have to review it. They always have to be a positive number. Sometimes something will get misposted and we'll pick up the report and we'll see a negative balance. And so we say, okay, let's go look at that account number. What got posted in there that doesn't need to be there or shouldn't be there, and we have journal entries that way. But it's just a matter of going down every single number on the balance sheet and making sure you know what it's comprised of. So a little further down line. Again, making sure that your estimated revenues and your realized revenues match those details, and we'll get to those when we get to the detailed report. Again, current year encumbrances, prior year encumbrances, any payables that you have that you know exactly what they represent, deferred revenues. When you come down to the bottom with fund balance, you want to make sure that it agrees to last year's audit. You want to make sure that any of the transfers that you did, any appropriations of reserves that you did in the budget got recorded. And then ultimately, you end up at the bottom where there's a recapitulation of the difference between the revenues and the appropriations down bottom. And the best part of the software is that it tells you how you get to the amount of surplus that you estimated in the year. So all that needs to work through prior year encumbrances. If the bottom line is not what you budgeted as fund balance, pick up the phone, I'll help you find it. So go a little further on. And again, you look at the revenue. So this is the revenue summary. You're just seeing district tax and state aid, and you're getting a bird's eye view of what the change is. So you can see in Cheryl's situation, she has almost 450,000 of excess revenue. Go down to the appropriations, you'll see the total encumbrances, the amount available, and that has to match to the details. In certain situations, we would find that they didn't match because something wasn't linked in the software, but hopefully all those issues have been resolved. Where are we now? Are we in the detail? So again, tax levy was 90 million and it's been recorded as receivable. So you're seeing that in full. Making sure that you're monitoring all your tuitions, any transportation fees, making sure that the plus or minus and unrealized makes sense. And then when you get down to the state aid portion, you want to make sure that each element of state aid, you get the state aid notice at the early part of the year and you set it up and you know what payments are coming in. And then you get an update for different debit memos that are being subtracted from your state aid. And the state sends that out. Should be out, right? June? Do they send this state aid schedule with the adjustments out so that you can post them as of June 30th? And again, any questions with that? You want to be able to look at the final state aid notice and make sure that you have everything included in the general ledger. And then this is the expenditure detail. And again, you want to make sure that that ties to the summary, it ties to the front of the balance sheet where it shows the amounts that have been expended and the amounts that are encumbered. And then I think that's all I'm going to say about general fund. And then in the special revenue fund, and again, it might seem very perfunctory to most of you, but you want to make sure that you went back and looked at last year's audit to see what balances you were carrying forward. All of that information should be in eWig as well. I think our staff really aspire to make sure that they leave you with that information and that you know what numbers are coming forward. And then making sure that you have the final grant awards and that you have every single grant set up in the system, both as equal number of revenue and equal number for appropriations. And then Fund 30, I don't know how many of you have active projects, seen lots of activity in some districts and not so much in other districts, but you do want to make sure that when you have a referendum, if it's $20 million, that if the bonds aren't sold, you don't have revenue per se. I have a school district that hasn't issued bonds yet, and so they have some preliminary expenses. And so they're moving money from the general fund to the capital projects fund until those bonds are sold. But you're supposed to set up the project for the full amount, 20 million, and so you're going to be showing a negative. If you haven't sold the bonds, you have no revenue, and you're setting up the project. So in this particular case, 20 million. You want to make sure that all the expense codes for the referendum match what was authorized by school and by expense. So if it's for professional fees or if it's for equipment or other machinery, kind of movable assets, and the capital expense codes. And then debt service is usually not a problem, right? We have debt service, we know that there's going to be bonds and interest due, and usually that's supported by taxes and or state aid. So usually Fund 40 is not an issue. So that's pretty much all I had to say. But just say to you that it's important that you review it, because sometimes going through it the final time, you see something that stands out and that wasn't addressed. Okay, I think I'm finished. Am I finished? Oh, estimate year-end surplus. Okay, we've talked about this a lot, haven't we? We did a presentation in April, we did one at the conference. Again, it's a lot of work to get to this number, but all the things that I just said to you, making sure that the balance sheet is right, making sure that you've recorded all the entries for your reserves, whether you deposited money in or if you withdrew money during the year. All that information is vital before you can get to this step. And so I always say I'm always willing to embarrass myself that when I get a board secretary's report, I'm like, calculating fund balance can't be difficult. If the numbers in the 770 part of, or the fund balance portion of the balance sheet on the board secretary's report are right, and you get your revenue and you say, okay, this is telling me that you have an excess of $450,000 of revenue, and then I look at your appropriations and you have encumbrances, and that's fine, and the amount available is $3 million, as in the case of Milburn as of May, you can pretty much add and subtract and come to the number. But we had Caitlin do a presentation last year on this, and she did a really good job. So I hear, because everybody says, oh, I always use Caitlin's little template, her worksheet. There are a lot of factors that go into it. So we just ask you to be mindful to have it by your side, and absolutely, we are a team with you that we will help you to make that calculation. Doesn't have to be perfect, but we like to help you with that so that you can make good decisions in terms of how much money to have the board authorized for deposits into reserves in June. And I know in some districts this year, we're not really sure. There were a lot of changes. And so as my team of experts here have always said, estimate high. You know, you sit in your chairs, and I'm sure, you know, as an auditor, we can say, well, if you think it's going to be $3 million, why don't you just say a maximum of $5 million? Some of your board members might be very astute, figuring out what's going on here. And they might say, well, why are you saying $5 million? Where's the $5 million coming from? So again, whatever the environment is in your district and how you communicate with your board, we can assist you with that. But I did see a few districts where they underestimated and things went into excess surplus, and it's all appearances, right? We know what excess surplus is. We know why it happened. I used to say it's not a big deal. If you have excess surplus, you just put it in the subsequent exit, and you can deposit it to reserve that. It's the connection that you have with your client, with your advice. Stay in the loop with us on that. And then this is another same thing over again. We believe that this is the last year that you're going to have 4% unassigned fund balance. It's going to revert back to 2 next June. So it's very important that when the audits are completed for this year, we have conversations with each of you to make sure we're on the path. We know where you are, where you're going, and how you're going to get yourself back to 2% at June of 23. Extraordinary aid awards. I hope you all applied. We're talking about when that money comes in. And I think my team of experts said that the award notices should come out in July, and then you'll actually get the cash in August. And then Heidi has a little bit more knowledge than the rest of us because she's on some committees, and she said she believes that those numbers might be high again this year because we have a lot of money from COVID out there. So we don't know that for sure, but hopefully those numbers will be coming out in the next 30 days. And then as another note, because of COVID, districts can transfer unassigned surplus without commissioner approval for last year and this year. And then that's the statutory reference. Okay, and then I think everybody in the room knows that today is June 29th, and tomorrow is the last day to transfer money into reserves. So hopefully you've made an estimate of that and did a board resolution in the month of June. think that brings us up to Mon. Mon is going to talk to you about GASB 87. If anyone has a question, you can raise your hand. If you want us to answer them as we go or at the end, we'll be happy to entertain them. But thank you so much. Put that in front of you.
Katie, this should be in the front or in the back? Facing me. Okay. So sorry, we were having some technical issues with the people who are attending virtually, and hope everybody can hear me now. All right. I'll try not to scream into the mic because I know that I don't want to deafen anybody that's in the room. So new GASB standards. It seems like we can never get a break. There's always something going on every year. And what this GASB 84 is something that was applicable last year, effective for last year. It's going to be continuing to be effective, I guess, going forward. So just a reminder, 84 is where they kind of redefine what a fiduciary activity is. So what happened was student activities, your scholarship funds, your payroll agency, all those got kind of shifted to different funds. Your student activities got shifted into your special revenue, your payroll agency under your general fund. So it's just being shown in on a different schedule in the ACFR. And one thing that if you do your own estimate of excess surplus, just a reminder that when you do it, you've got to factor in the unemployment compensation if you have an unemployment compensation trust. Because as of last year, it sits as a restricted fund balance as of June 30th, 21. Yes, we're in the right year. So just make sure that when you do your estimated surplus for the 22, you factor that number in. 87. So leases, and I've probably been saying this a lot at the different presentations. I want to, also bring it up here. So leases is a new standard that they basically redefine how we're going to account for leases. I put this chart in here to kind of make it a little bit easier for people. So pre-87, there are two types of leases. There's operating leases and capital leases. Operating leases are leases that, like copiers, that you don't intend on keeping. A lot of times now you have Chromebooks or some sort of technology leases that, because of the upgrade in technology, it happens so often that nobody really keeps the equipment anymore. So those are considered operating leases. Capital leases are the ones that you do intend on keeping. For example, vehicle or bus purchases, that type of things. And so now with 87, what used to be operating leases, which we never record as a liability on the balance sheet or district-wide statement, now you have to go through the decision tree to decide whether 87 is applicable. And if it is, then you have to record an asset with an offsetting liability. So you have to ask yourself, is the contract agreement for the lease with terms of more than 12 months? If it is, then 87 is applicable. And we have a chart, I think it's like 2-pager that I'm going to go over in a little bit. And for capital lease, you have to ask yourself the question, does the contract agreement contain a termination option? If the answer is no, then 87 does not apply, which means that it's handled kind of similarly as it has always been. They just change the terminology of it. Instead of calling a capital lease, you're supposed to call it a finance purchase. If the contract has a termination clause or option, then you have to then kind of go back up and say, is the contract more than 12 months? If it's yes, 87 applies. If it's no, then 87 does not apply. You don't have to worry about it. Now, let's see. Oh, do you want to turn? Yeah. Yep. So I'm just going to go over the two-pager that's in front of you. Did you hit escape on the presentation first? Let's see. Okay. All right. So we came up with this inventory of leases. Hello? Normally, I can probably shout loud enough so without the mic so everybody can hear me in the room, but for the virtual people's sake. So we came up with this spreadsheet and a sample of different types of lease and the information that we're looking for that you need to put on the second tab, which you have as a blank tab. Do you want to shift over the second tab first? So the first tab is basically just a sample on how to fill it out. The second one is for you to fill out for your district. So going back to the first tab, we just have 3 examples here. One is a Chromebooks lease, which normally would be your, you probably won't keep that. So, putting in the frequency of the payment, whether you're paying it quarterly, monthly, or yearly, the amount of each payment, including the interest portion of it. And what's most important is that when you have any of these leases, whether it's copier leases or Chromebooks, technology, whatever it is, you have a copy of the agreement from the person who's leasing you the equipment with a payment schedule that has a breakdown of the principal portion and the interest portion. And also what we need would be the actual interest rate to be stated in the agreement. Because sometimes, most of them do have it, but when you do copier leases, for example, a lot of times they don't like to put the interest rates on those lease agreements because I guess they don't want you to know how much interest you're actually paying. But if it's not on the agreement, you need to go back to them and ask for the interest rate. So you're going to put in the date of the first payment, date of the last payment, the interest rate, and then, there's some questions here. Do you intend to keep the equipment so that we can figure out whether it's considered a finance purchase or an operating lease or a lease? Option to renew lease. Is there a termination option? And has the lease been amended? Because sometimes you can tag on new equipment, and what they do is instead of issuing you a separate lease agreement, they just amend the lease to include new things. Or if, I've had it happen where one of the buses that they're purchasing through the lease agreement got totaled. And then, they have to go to insurance and they have to kind of adjust the lease agreement as well. And if there is a amendment, we would need the details on the lease on the amendment. And do you have a payment schedule? That was what I was saying before. And if you don't, it's important to get it from the person or the company who's leasing you the equipment. Can you scroll down a little, Val? Because I have some questions over on the bottom. So as you're filling this out, there are some questions here that's helpful because you can't just think of equipment leases. What 87 does is it gets you to kind of think of all your even rental agreements, right? So if you rent space from another entity to operate an academy, or you rent out space for facilities, if you have an official, like a formal contract that's more than 12 months, it falls under 87. So just keep that in mind. Let's see. That's pretty much it. Heidi, do you want to, is anything I missed? You want to add? Right? Okay. So we ask that if you can please fill out this inventory lease to have it ready and have all copies of the lease agreement ready for when we come and do the audit, because we have to evaluate, now, one, whether any of them falls under 87. If they do, if they are material enough that we have to do a separate calculation to come up with what the, so you're supposed to record an intangible, what they call right to use asset with an offsetting lease liability on the district-wide statement. And then every year, you're supposed to amortize the lease liability as well as amortize the intangible lease asset. So it's just additional work that we'll have to do, or, you know, most of these should not be that difficult if there is a lease agreement with the payment schedule. However, if you run into a situation, especially with building leases, where usually you're not going to have an interest rate in there, or you might not have a breakdown of the principal versus the interest, then you're probably going to need the help of some sort of a software to calculate what the liability and the value of the lease asset is. And we've vetted a couple of software, and I think we've pinpointed down to one that we're going to recommend to the group if you need help with a calculation. So going back to the presentation though. The flow chart. So there are some exclusions, and it's listed here. I'm not going to go over all of them, but mainly, you know, if it's under 12 months, it doesn't count under the new standard. If it's like copyrights or biological assets or inventory, they don't count. And these are just some of the, you know, couple of examples of how to initially report the lease asset. As you can see here, the intangible right to use the lease asset, you have to calculate the present value of the lease liability. So it's just not like a straight math. And then that's the subsequent reporting for lease payment. Some of this entry is probably not going to mean anything to you because you don't record some of these, you don't record on the district-wide basis because the liability and the asset goes on the district-wide financial statement. The only thing that might affect you is, you know, when you have the lease payments, obviously you charge it off to your budget. So when we do the GASB 34 conversion, we're going to have to do elimination entry to kind of remove those payments. And required disclosures, there's going to be additional disclosures that's required. We have to put in what's the general description of what the leasing arrangement is or the rental arrangement is, the total amount of the lease asset, and the accumulated amortization, similar to where like normal capital assets, you have the historical value less the accumulated depreciation. It's kind of the same idea. And then we have to break it down by, you know, category. So if you have, you know, a whole bunch of vehicles or copiers or buildings, it has to be all broken down differently. And then information about principal versus interest requirements, and if there's impairment loss, that type of thing. All right, so that's it. So it's gonna be a lot of work for, I think, both you and us. And as much information you can get us in terms of filling out the lease inventory and getting copies of the agreements, and as much as, you know, that will be, I think, very helpful. And we're going to have to, you know, review all of that too. Yes. Yes. When I think after the presentation is all done, the recording along with the PowerPoint and all the other extra stuff will be sent to you. Yes. Yes. No, because the ESIP usually is technically considered like a finance purchase, because you're keeping all the like equipment, like all the installation they put in for the energy savings. So it's considered a finance purchase. You just can't call it a lease anymore. You have to call it a finance purchase. Don't ask me why I don't come up with these new ideas. I think the intention of any of these new standards is to make your financial statement more, user-friendly to users of financial statement, which is actually, I think it's moving to the opposite direction, because none of these new standards are making it any easier for anybody to read them or understand them. Any other questions? Sorry about the technical difficulties.
Okay, I'm gonna add a little bit to that. Great job, Mon. So the inventory list is the beginning process, right? So we're asking you to go in and put on your thinking caps and stretch your imagination a little bit and put anything on there that you think might be considered for the standard. And then it's our responsibility, once you give us that information, to see if it's complete. Did we find anything in the minutes? Do we see anything anywhere else? Do we see contractual payments through your expenditure cycle that maybe you didn't pick up? So in addition to you telling us, we have to validate what you tell us. And then from there, now I know that some of my clients have already forwarded some of these lease schedules to us, and we haven't gotten to the point where we're going through them one by one, but we certainly will. And like Mon said, some of them won't fit the criteria, some of them might fit the criteria. Some of them you may have, the interest and the principal and interest rate and principal and interest details, some you won't. She and Heidi have been working extensively on this other side of our practice that works on other entities, have been looking at it too. And they spend a lot of time looking at software and trying to figure out how these calculations will be made. So we will continue to communicate with you and update that information. But I know when we put this presentation together, Heidi and Mon and Val said, we don't have to put 84 in there. We did that last year. Well, yeah, we did, but it's continuing. And it's just another continuing thing that we change from your financials. So when you're looking at your report last year, got a few phone calls saying, I'm not tying into Fund 10 cash. I'm not tying into Fund 20 cash. And that's because student activities and scholarships are now in Fund 20 cash, and payroll and unemployment and other payroll-related flex spending are in the general fund. So that's just a reminder. And, these things, they're implemented in 1 year, but they're implemented forever. So, we have a spreadsheet that Valerie and I created way back in the beginning of time. I was the one saying, do this, do this, do this. She created an incredible spreadsheet for us that shows how we go from your records. We have Fund 10 balance sheet, Fund 20, 30, 40, and all the macerations that we have to make to get to those reportable numbers. And anytime any of you want that information, we can share it with you. We're supposed to be sharing it with you, but it's mind-boggling. And then, of course, we have the in-charges that say, oh, I'm going to link everything. And I'm like, you're linking things? I want to see exactly how you go from A to Z. I don't, sometimes linking can be very useful and sometimes it can be detrimental. So always challenging formulas and spreadsheets. But that's just a reminder to you that with every standard, there's just another thing that we have to make more columns of more adjustments to your numbers. And we like you to be somewhat familiar with them so that, when people are asking you questions, you can answer that. So I think that's all I have to say. So now Heidi is going to talk to you about.
We're going to let you all take a little bit of a quick break. If you want to take a break, refresh your coffee, grab a little pastry, and then we'll give you about 5 minutes or so. Thank you.
Okay, everybody, if we could get back to our seats. Awesome. All right, we were wondering if this might be a good time to ask if anyone has any specific questions. None? All right, then. We might have some by the time we get to the end, but Heidi's going to talk to you about all the technical information. She's going to talk to you about federal grants. She's going to talk to you about NJDOE audit program updates. So here you go, Heidi.
Okay, so I have a contact at DOE, Jackie Grama, who very kindly gave me a list of some updates because I said we're having this seminar today. So there's a couple things, like we said, the audit program will probably come out. It used to come out in July. I remember back in the day when it came out in June. Lately, it's been coming out in like around early August because they have to go through a lot of different reviews. So one of the things the one thing that I found on the list, and I think it was like 2 pages of items, because sometimes they add something new that they want us to look at. And that item there, I'm not going to read it off because it's about chapter 44. So they want us to inquire and make a subsequent review of health benefit data submitted and review the chapter 44 summary report. Now, please understand, we haven't ever seen this, so we don't know what it is for reasonableness. And that kind of concerns me because I don't know how we would be able to determine what's reasonable and what they expect is reasonable. And then also the timeliness of this mission, that should be pretty easy to do. And comment whether the data certification was completed by the CSA and whether the submission required significant revision due to district errors or omissions. But we definitely will be checking with DOE and expressing our concerns about us doing that type of review. And then there was 2 new aids for the year. The first one I'm not that familiar with. I haven't had any of our districts mention that they've received it. It's called Military Impact Aid, and it related to on-roll resident students whose parents are on active duty. And then the other one, I've heard other districts talking about this. I don't know how to pronounce this. ACFRs. So the district could get reimbursed for up to 100% of all approved costs for any special needs students who would have turned 21 in fiscal year 21, 22, or in 23 who needed some additional services based on their IEP. So has anybody received either one of those aids? Okay. So then some of the stuff you're familiar with, the fact that for the ASA count, we can use fiscal year 20 and 21's applications at the fiscal year 22 when we review the ASSA for low-income students. And then most districts are still serving, at least for fiscal year 22, free meals to all the students and getting reimbursement. And then the transportation bid threshold went up. And then this is new, and I don't know if anybody's had to deal with this, but the DOL effective 5/3/22 requires that any contractors who submit the lowest bid for a contract and are subject to prevailing wages are required to certify to the district that the prevailing wage rates required by the act shall be paid if that bid is 10% or lower than the next lowest bid. Does that come up? Anybody with any new contracts? Okay, just a heads up, that's new to us too. And then these are just kind of things that we know that are important, like that we'll need for the audit. The audit program, obviously it's our Bible, it's a couple hundred pages. On behalf payments, we can't even finish the C1, that statement of expenditures and revenue for the general fund without the on behalf. And pensions, originally they said the GASB 68 information would come out at the end of April. That went by the end of May. that went by too. And here we are almost at the end of June and it's not in sight. So usually, and it still says coming soon on their website. So, because it'll usually come out with the PRS, which is for the municipals, we use that for our municipal reports, but then they also come out with the TPF and we need both of those. And then obviously 75, who knows when that's going to be available. Okay, so a lot of questions. Everybody receiving the COVID funding. We mentioned this last year and it really didn't transpire. We did have a few districts that had a federal single audit who hadn't had one before ever really, or in recent past. So I think it's likely that we will see more districts that might have a federal single audit this year. That meaning you have 750,000 of expenditures, which includes encumbrances because of the ESSER funds. Last year, we saw most people were spending mostly ESSER 1, but I would imagine this year you're spending probably a pretty good amount of ESSER 2 and maybe into ESSER 3 or the ARP funds. So the thing is, when you have a federal single audit and you don't have one, you haven't had one the last 2 years, for federal purposes, you're not considered to be what they call a low risk auditee. You're not a low risk auditee. It's not a high risk auditee. So when that happens, we have to test programs that normally, if you're considered a low risk auditee, we test programs that are 20% of total expenditures. But if you're not a low risk auditee, then we have to test 40. So what could happen is we might wind up testing 2 or 3 programs. Because sometimes what happens is if it's a 750 or more, we have to automatically test that program. It's considered high risk, but it's not. A lot of times districts will have smaller programs and we might have a couple that are in the 200,000 or 300,000 range. So we might have to test both of them. And the federal single audit is a lot more comprehensive than the state single audit because we have to look at all these different compliance requirements and we have to actually review internal controls as well. And they put together their own compliance supplement. And then I had mentioned this last year about the risk assessment tool that the DOE was going to come out with for assessing looking at programs. It used to be like comprehensive monitoring. Now it's called collaborative. I don't know what the collaborative means, but, and then they had talked about some of the districts would have on-site auditing, some would have a desk review, and some of them would just have like technical assistance. Well, that started to happen this year, and I'm going to go into more great detail on that. And then one of the things that we've been stressing all along is we've seen it when they've come out and audit, you need to really, not so much for our sake, but if they come out and audit and you're not using the account codes for revenue and appropriations that they've put in the chart of accounts, they will write you up for that. So you don't want to get written up for something as simple as that. So please make sure that you use those. And it's helpful for you in reporting and for your reimbursement requests. It's helpful for us when we put together the audit. And like I said, for if you get audited. So even though this isn't a federal aid, we did get a number of questions about securing a children's future bond act, or they call it the school security grants or Leases law grants. So I wanted to put a slide in here about that. So unlike most of our grants, it's not recorded in Fund 20. It's either recorded in Fund 10 or Fund 30, though I would imagine that most of you are going to have it in Fund 10. So they do have a specific revenue code, and it's listed up there, 3256. So you would record your reimbursements, whether you spent the money this year or the prior, you're still going to use that same revenue code. And then if the expenses were incurred in fiscal year 22, most likely most of your expenses are going to be in the capital outlay line items, whether it's equipment or it's something in the like maybe 400, 450 construction services. So anybody have any questions or had any concerns about security grant? Everything's going okay with that? All right. So here's the collaborative monitoring risk assessment tool. So we had 2 districts who were selected, who were lucky to be selected, and they were kind enough to share the risk assessment tool that they received and showed like why they were selected. And then also those two districts recently got their report back, and they were kind enough to share that. So first, I'm going to go through the risk assessment tool indicators, and then I'm going to go over some of the findings that those folks had in their report. So has anybody been selected? I would imagine they're probably going to do the same risk assessment in fiscal year 23 and select another round of districts as well. So there were 14 different indicators, and some of them.
Just so that everyone knows, with the two, we did have, I know that I had actually 2 clients selected this year in this collaborative monitoring, and the difference in the size in the old, I know a lot of these programs, it used to be a size-based. Well, I have a very small program, so the likelihood of me being tested is slim to none. I had a very large K-12 selected and a small, tiny, single building K-8 selected. So there was no real reason or rhyme or reason as to why those 2 districts were selected. They're actually the ones that we're using as our sample. One of the things they did note in their reasons for selecting was the timeliness of their requests. Both of them didn't request monthly from most of their grants, which I know a lot of you do quarterly and or twice a year, and their infrequency of request actually triggered them to get on a list and then got selected. So just giving everybody a little back insight to the 2 that I knew.
Okay, so these are the indicators, and like I said, not all these will apply to all districts depending on the type of district you had. The first one is the 4 and 5 year graduation rate, so that obviously is not going to apply to a K-8. Number 2 is compliance with locally administered assessment data collection, whether timely submitted. And you're going to see a lot of times that timeliness and frequency seems to be a key word or key factor in these. And then an accuracy as well. So indicator 3 is the accuracy of the New Jersey Smart Data submissions. Number 4 is the percent, like Valerie said, percentage of funds drawn down, and they broke it up into 2 different groups: the existing funds, the non-ESSER COVID funds, Title I, all the titles, IDA, Perkins, and by June 30th, and then percentage of the ESSER funds drawn down. And then the same thing, frequency of the reimbursement requests for the titles, Perkins, and IDA, and the frequencies of the ESSER reimbursement requests. And then this is another thing, revisions and being late. So that seems to be one of the factors that they include in a lot of this. So the number of application revision rounds, whether your application was late, whether your final report was late, whether your revisions were late, the total amount of your award. So actually, I'll go into it a little bit later as what the factor, because they were like risk scores. 0 was actually good in this case, and like a 10 was bad. So the higher score you got, the more likely you would be selected. And then also the total amount of the ESSER rewards you received. So they had a scale where I guess some districts received 100,000 and the top was 5 million. So if you had 100 or less, you got a 0. And if you had 5 million or more, it was a 10. And then whether you had any audit findings in the ACFR. This isn't in the AMR, these are the ACFR. So it would be like a single audit finding or a significant deficiency. And pretty much most of our clients don't have those. So I wouldn't think that would be a factor. So for example, with the indicator 4, with the percentage of the drawdowns, if you drew down 75% or more of your budgeted funds, that would give you a 0. But if you only drew down less than 25, you'd get a 10. And so like Valerie said, there was one very small school district. So it wasn't necessarily always the size of the award that you got or the size of your school. You could be a very small school district and be picked. And likewise, you could be a very large school district and be picked. And then one of the districts had a high risk score on indicators for late revision submissions and the number of application revisions rounds. So I guess whoever designed the risk assessment tool felt that these were important factors. And then another district had, on the New Jersey SMART submission, they had an error rate of 1.5, and that was considered to be high risk. And then what they looked at was these 8 different areas in the monitoring, 8 different, so first was, and they sent this very comprehensive list to the district, and since it was all done by a desk review, they had to upload reams of information to this repository at DOE. So what was interesting was that they got to pick which purchase orders they sent. So obviously, if you get selected for that, I'd make sure I'd pick one that you're pretty darn sure has no issues with it. And then they also wanted equipment inventories. And then obviously they were very interested in the reimbursement request. And another big thing you'll see many times listed here is policies and procedures. And then we've noticed that in a lot of the other monitoring that they did, they want to have policies and procedures for everything. And then documentation, so if they requested you to send one reimbursement request, they wanted to see that why you requested what you requested. And it's since the reimbursement, you need to have spent the money already. Sometimes we'll see where we'll notice at the end of the year, the district has what we call deferred revenue or unearned revenue, meaning for that specific grant, and it shows up on the schedule of expenditures of either federal or state awards, where you've requested more money than you spent. So I would think that would be a negative factor. And then they also looked at personnel. They want to see timesheets, they want to see the position roster control, charge the grant, and accounting charges. So they want support for any personnel that you charge the grant. And then the application, once again, policies and procedures for the application, and SMART submission, policies and procedures. Supplement, not supplant, that was an issue in the past. We'll go in more of that because one of the districts that was that was audited in this collaborative monitoring was brought up in an issue in supplement, not supplant. So they wanted to see purchase orders that help support that. And then minutes and policies once again. And then there's another one that I'm really not that familiar with, because sometimes some of the things that come up in this are programmatic, and that's not really our area of specialty. So coordinating early intervening services, they wanted to see agendas and attendance for professional development and a tracking method for students receiving services. And then the final area, H, was provision of services to non-public schools, proof of consultation, and the vendor contract that helped with that, and a sample of an IEP that they said in the report that was redacted. So here are some of the results. Here are some of the findings. Title I, and this seemed to be another big thing, and we've seen this before where there's lack of evidence that was provided for meeting with parents. That was a continuing theme here. And we've noticed that, parental notifications, or a lot of times in the past it was non-public, there wasn't any documentation of these meetings. So they're looking for a policy for that. And then also they talked about outreach to anybody that was parents of English learners. So people with maybe English not being their first language, how to communicate with them, make sure they're involved. And then they also talked about this foster care policy that wasn't updated. And then the final one had to do with one of the schools and a school-wide program under Title I. They didn't have the intent of the programs for that one school. And then in one of the districts, they had a schools in need of improvement, the SIA program. And then I don't really know what this is, but there were, I guess, certain certifications that need to be done with the school-wide the annual school plan that didn't indicate that the LEA approved that. And then under Title III, once again, lack of evidence of parental and family engagement. and no evidence, and they want to have evidence. So you want to have an agenda or meetings or a sign-in sheet. So please just make sure you have all these things to support. Because in the world of the auditor, no documentation means no evidence. So please make sure you have evidence. And then also under the immigrant program for Title III, make sure you identify those students, and then you have to have a list of materials and services that are specifically targeted to these students. And I think in some cases, some of the purchase orders that were sent or the description was for general instructional supplies. And in their mind, that means like, that's not supplementing, that's supplanting, because you as a district should already be supplying those type of things. And then we also have IDA preschool and basic, including the ARP funds. A lot of the things I was noticing when I was looking over the report, and I think it was really kind of unfair, was they're saying certain things in the application were not done right or clearly defined. And I'm like, well, it already went through DOE and they approved it. So I thought it was kind of unfair that the districts, were getting written up for that. But that seemed to be, once again, a continuing theme. So that with the supplement and supplants, like I said, the general classroom supplies, and then lack in the application where it talks about specifically those supplies or materials, how they relate and how they're going to be additional to the program. And then once again, like I mentioned about the non-public students, evidence of that, of personnel present during the development of that plan. And then for the IDA preschool and basic, the ARP funds, submitting monthly reimbursement requests. Really would try to suggest you try to do that, if not monthly, maybe at least quarterly. And then the fact that the ARP, I guess, maybe at the time that they came out and did the review or did the desk review, the ARP, IDA, and preschool applications were had been returned for some revisions and that they hadn't been sent back. So that was one of the things they were picking up as an issue. And then they also moved on and looked at ESSER 2 and 3. So the ESSER 2 mental health, they didn't provide sufficient evidence of programmatic requirements. For example, a board resolution approving the consultants. So just make sure that anybody that is providing those services, everything is identified in the minutes. They seem to really like that. And then a schedule of support provided by the consultants, supporting the fact that those services were actually provided. You know, the actual students, you know, dates, times, that probably would be something they're looking by for. And then ESSER 3 for accelerated learning, coaching, and education support, using funds outside of the allowable use. That's what they derived. It's not matching what was in the grants question, application number 1. And then another thing, once again, this seemed to be in a couple different cases for the one report that I looked at. The application wasn't sufficiently answering, the district's application where they answered the questions, they didn't sufficiently, at least in the collaborating monitoring team's opinion, didn't adequately address the question. And once again, with ESSER 3, with the summer learning, the same thing. Once again, this is a continuing theme. The application is not sufficiently answering the questions asked. So has everybody submitted their ESSER 3 applications with no problems? Were they returned? We hope that this was helpful, so that hopefully you won't get picked. First of all, hopefully you won't get picked, first of all. And if you do, you'll know how to answer it and be successful. Can we answer any questions about any of the things that I talked about? If you feel more comfortable, like coming up to us after we're done individually, feel free to do that or reach out to us. Do you have any other questions about anything like the audit process or anything that's come up so far? Yes? They can be each. It depends. It's the same parameters as we discussed would be applied for Fund 20 as well. So you wouldn't have any salary encumbrances. So if you ordered something and you received it by the end of the year, so let's say it's tuition for IDA, always going to be accounts payable because those services were rendered. If it's a good that you ordered some supplies, you received it before June 30th or on June 30th, accounts payable. If it was just ordered and not received, encumbrance. Sure. So, I mean, obviously, we hope this was helpful. And if you have any suggestions for next year, we would appreciate that as well.
Absolutely. So we did the presentation at the conference, and many of you were there, and some of you may be not there. Someone just brought it up to me that we might want to mention about having excess funds in the food service fund. And so we'll bring it up, and we don't have a definite answer for you yet. But again, every time a question comes up, I field it to Heidi because I've said this before. Instead of 7 or 12 different people in our firm reaching out to the state or to the Department of Agriculture, everything channels through Heidi. So what we found is districts who are not in the food service, National Food Service program were breaking even, or board was making contributions. Those of you who are in the federal program were getting tons and tons and tons of subsidy reimbursements. And so last year, many of you who were in the program exceeded the maximum in the food service. And my opinion, and I think most of my colleagues here opinion, was it's situational. A lot of things happened because of the pandemic. So to me, it's like, of course you're over because your expenditures decreased dramatically. And so back in June, earlier this month, talked at the New Jersey ASBO conference that whatever the excess was last year, it may not be as large this year because your expenditures have resumed, maybe not to 100%, but they have definitely increased. So during the year, we've had people saying, I have to spend that down, spend it down. I'm like, well, you might not have to spend as much as you think you do. And then we had questions about what it could be used for. So did you want to comment on that, Heidi?
I think what Kathy said, all I can say is that we do not write you up as a comment if you have too much. We're required to put it in, but we don't have a recommendation. Have a lot of districts found that they have a lot of excess money still from this year? Yes. And how are you guys planning on handling it? Looking for solutions? I know there's equipment. One of the things that I would advise you is if you feel like some people use alternate things and charge additional expenses to the cafeteria fund, say the cost of the custodians or other staff for cleaning, or you could use maybe some kind of utility or rental expense. I mean, not rental expense, use of the cafeteria. But I would only recommend that if you're going to be able to continue to do that. You don't want to have it, we have it in 1 year, we don't have it another year, we have it in 2 years, then we don't have it again for 5 years. If you have any specific things you want us to reach out to, because I know sometimes it's nice where we ask the question and we don't have to say, well, it's XYZ school district, but we're just asking for a client, we'd be happy to do that.
Thanks. Every time somebody speaks, it jars another thought in my mind. So with that, you're allowed to transfer money back from food service to the general fund. But we said if, you know, you would have to demonstrate that the money was there before the pandemic, before the flood of subsidies came in. Because if, you know, you have all this retained net position in the food service fund and you transferred it back to the general fund, they would say you're sending federal dollars back and you can't do that. So kind of need to let this flush itself out and or consider how you can demonstrate that you had extra funds prior to, but that is allowable outside of federal funds, that any excesses in the food service fund can be sent back to the general fund as an equity transfer. And again, case by case basis, and our goal is to keep you out of trouble. Anybody else? Anybody in the room have a comment or a question? Super. I think we're going to have to come up with at least one topic.
Oh, okay. So has every, I mean, I have a thought, sorry. So how is everybody doing with spending the ESSER funds? Do we feel like we're going to have spent all of ESSER 2 by the end of the year? Are we started spending ESSER 3?
If you do, you're on ESSER 3.
Okay. I'm not aware of those funds, but I guess we'll definitely be learning about them. I can definitely ask about that. So it would be helping the business office to help run the program for the summer? Because you're offering the program over the summer. Okay. To me, it seems reasonable, definitely. Because you need those people specifically because you have that program over the summer. That sounds like a good plan. I will ask on your behalf. A district.
Heidi and I buy in for the microphone. Heidi always says, oh, I don't like a microphone. And I said, oh, I do. I want to be a rock star. I want the microphone. But anyway, these are very relevant questions. Some of them we're not really familiar with. But again, we were trying to do roundtables and we haven't done one in a while because we were doing New Jersey ASBO conference. And now we're doing this. But in the summer and into the fall, we might be addressing some of these issues as we have more information. So with that, I was texting Laura to see if lunch was going to be available earlier, and I'm looking to her for a nod or not. But at this point, we're only about 10 minutes early. Almost. All right. So that gives us some more time to chit chat, but lunch should be ready within the next 10 minutes. So thank you all for your attention. And again, Heidi said, if there's anything that you can tell us, what I was going to say before Heidi took the microphone was, maybe we'll have to change it up a little bit and do something with one of these topics, like a little bit differently or a little bit more in depth, because we feel like we're saying the same things over and over again. And again, we're just encouraging that we can get through the audit in a very quick and efficient way. So thank you all, and we value you all as our clients.